Supply and demand is all you need to be successful in trading. I'm going to break it down in this video how simple and easy the strategy is. So right here, I have two live examples that I recorded of me taking these trades. So breaker structure, going with the trend after or at New York Stock Exchange open because of how these indices are playing out this year. And depending on the higher time frame, you can use it to your advantage or just go off the 5 minute. But you can see right here, I just closed $270 personal account and took a few dubs on my expresses and combines, leading me to payouts, passing combines. Here's another example, same exact setup, same exact concept, supply and demand, breaker structure. We have a gap from the supply on these setups, and we're going with the trend according to the previous break of structure. So the trend is not that clear in these setups, but breaker structure is a key factor here. So you can see taking my entry based off break of the candle, very simple, after the supply or demand forms after a break of structure. So this was another setup. I took this one this week on my 5 150K combines and on an express as well. See right here, I'm 3 contracts in on Russell. These are all going to be Russell setups. So little unorthodox for people. Same exact concept, same exact thing. Russell, ES, NQ, NASDAQ, SPX 500, Russell 2000, same exact stuff. So just like that, just close my express, and right here, I'm up about 300 for the day. I was down 200, so this is like a $500 trade. Pretty easy, pretty simple. So these are just the live examples. Right here, I had a mental stop loss of $220. So if it pulled back to there, I closed it, which I did, close my runner. I wanted it to break the low of the wicks here, right here, but didn't get that. Perfectly fine. Hit my 1-to-1. 1-to-1 is mostly what I go for on 5 minute setups. All depends on your confluences, whether you want to take a runner or not. So just like that, I should be closing right now. And I can show you live screenshots right here. Same exact setups that I took on my personal account, 290, 200, 185. One trade a day is all you need. Very selective, very selective. So we're gonna go to trading view now, and I'm gonna break down the first setups for you, and I'm gonna run through a lot of them. I got a ton of setups here. So this is the setup I took on those live recordings. So market structure, consolidation, fresh breaker structure, can't see it, go to the line chart. These are lows, we broke those lows. So now all we're waiting for, pull back, tap the zone, take it down. Simple as that. So these setups are only 5 minute time frame. There's not much to see here on a 50 minute. There's no supply here, 50 minute. Higher time frame is consolidation. We even have a 1 hour demand down here, but we can pull back, tap the zone, take sales to come down into this 1 hour demand. We still haven't tapped it. So back to the 5 minute, wait for it to tap the zone, there's your entry. That was an instant 1 to 2. Very simple, 2.6 point stop loss. 1 to 2, easy as that. Another thing, another same exact supply with the breaker structure after New York Stock Exchange open with a gap attached to the supply or demand. Tap the zone, take a sell, take a buy or sell in the direction of the breakout structure, going with the trend based off of price action. So tap the zone, waiting for it to break the low of the previous candle. We just did right there. So entries right here, stop loss right there. Going for a 1-to-1 here. Easy enough. You hit a 1 to 2 just like that. Once again, now I'm going to speed run through the rest of these setups because this is very prominent this year. This year, indices at New York Stock Exchange open or after, there's a lot of winning setups. Not so much pre-market. So same exact thing here. We broke structure, can't see it, go to line chart. Lows right here, we broke it. So we're looking for sales. Did not mean to play it like that, that's perfectly fine. Break of the candle, stop loss at the high of the wick after it broke the candle inside the zone. 3.1 stop loss. Another 1 to 2. Very simple. Another setup after New York Stock Exchange open, New York Stock Exchange pushed up, broke structure, broke this high right here. So we're looking for buys. Demand zone has a gap right here. You can't see it. I'll have to make a video on this because I want to keep this one short and simple. There's a gap right here, an imbalance that needs to be filled, which gives us a higher probability for these demand zones, supply zones to be tapped. Gives us more of an advantage for these setups to have a higher probability rather than not having a gap. According to my strategy, this is what I have learned, what I was taught, and what I know consistently works for me. So tap the zone, waiting for the break of the high of the candle. Now, since we're taking buys right here, so entry would be right here, waiting for the entry. Hasn't broke it yet. There you go. Your entry would be right here, going for 1-to-1. Right here, we don't have much higher time confluence, but we are bullish, so we're going with the trend. Still going for 1-to-1 here. Played around a bit, and we just tapped the 1-to-1, and I believe it pushed up a little bit more. There you go. We're already close to 1-to-2. Simple as that. Another one. New York Stock Exchange is about to happen. Tap the zone. This one's a little unorthodox because this is a huge stop loss, but still cooks at New York Stock Exchange open. So 7:30, 9:30 EST. Entry is about to happen. This one's a little bit after, very quickly after New York Stock Exchange open. Same exact stuff. Still applies. You got to be fast though if you're going to take these setups during New York Stock Exchange open, because there's a lot of volatility here. So you got to be very careful, quick on your toes, and use a stop loss 100%. 1-to-1. Once again, break a structure, come back. We have a gap that needs to be filled. It's a very tiny gap, but still a gap. Size of the gap doesn't matter. It's more so that we have a gap. Tap the zone, take buys, 1-to-1. Right here. Now we broke a low here to tap into this demand zone. Perfectly fine. We are bullish. We are 100% bullish for the day. So looking for buys. So I needed to tap the zone. Tap the zone. Break of the candle just happened. Boom. Stop loss 3.3. 1-to-1. This was a beautiful setup. Bro, 1-to-6. Jeez. Come on. That is A plus entry with stop loss. A plus. Because of the reaction that had off the zone. It gave you a 1-to-6 because of how close your entry was to your stop loss. Beautiful RR. Beautiful risk to reward. Now this one, we have two setups here. One that happened right at New York Stock Exchange open. A little bit, just not ideal. It's not ideal because if you wanted to capitalize on this setup that tapped during New York Stock Exchange open, you have to take an aggressive entry because you're going to take a sell based off the low of the previous candle that tapped the zone. I mean, you're going for a huge stop loss here. So this one's not as ideal. So sit it out and wait. If you're not going to take the aggressive entry, aggressive is risky. You need more of a confirmation. So right here, supply, we broke structure here after New York Stock Exchange open. At New York Stock Exchange open, we broke this structure, and then we broke this low after. So back to back breaks of structures, clearly bearish. Tap the zone, break of the candle. About 7-point stop loss. Going for 1-to-1. TP hit. And I believe this tanked. Yep. Another one. This one's a lot better than the other ones because of consolidation. We have all these lows here. We have an aggressive drop. So we have more reason here to believe that there will be aggressive selling after it taps the zone. So waiting for break of the candle here. The break of the candle entry would be right here. Stop loss above these wicks. There you go. Instant 1-to-1. Beautiful setups. 1-to-4. 1-to-4. Beautiful risk to reward. Now this one, a little bit different. 5-minute demands, 5-minute supply zone here. We do not have the gap. This would be your supply right here. Now where's our gap? It's not there. It's not attached to the supply zone. This is the difference between high probability and low probability, is the gap attached to the supply and demand. So here, this wick right here covered the gap that would be attached to the supply. So 5-minute is not viable here. It's a low probability supply. So go to the 15-minute. What do you have? High probability 15-minute supply. We have this big gap. So now we're looking for a retracement into this supply zone. Take sells. Simple as that. We're bearish, clearly. Broke structure down here. EMAs are in line here, 13, 50, 200. So this is looking pretty good. Sitting on the 5-minute here, waiting for tap of the zone. There you go. You can even go to the 15-minute here. Wait for your break of the candle. Just like that. Stop loss 4 points. And you already hit 1-to-1. I mean, and bro, almost a 1-to-7. Okay, almost a 1-to-10, 1-to-10 risk to reward. Insane. Now, if we go here, Russell, we have this one is a A+ setup. I wish I was looking at Russell earlier in the year because these setups are crazy. 4-hour supply. Now we have a 1-hour supply inside that 4-hour supply. We know we're in the 4-hour supply. We know we're in the 1-hour supply, so we can delete these zones. 15-minute. We are inside the 15-minute supply. And we also have a 5-minute supply here that we are already tapped into. This would be our line right here for the 5-minute supply. So we already tapped it. Now, our trend for the day, bullish, clearly, but you have to take into consideration the higher time frames, because higher time frames are going to counteract the lower time frames. So you got to be aware of where you are at in price. A lot of the setups I just showed are only lower time frame. So clearly bullish. Now we're tapping into higher time frame selling zone. We had a huge bearish drop, break of structure. So we're looking pretty good for sells, in my opinion. I'm not going against the higher time frame when we have something like this with tons of time frame confluences. So here, looking for a break of the candle. This is right at New York Stock Exchange open. 7, actually it's a little bit after. So it actually gave you a break of the candle entry right here and lost. So you got to be careful with this stuff. Now, if you were to take this setup, 1 for 1-to-1, you're taking a sell on this 15 minutes before New York Stock Exchange open. Risky, very risky. So just wait here. You got to just wait. Just wait for New York Stock Exchange open to show the hand of what they want to do with these indices. Because generally this year, mostly this year, a lot of the moves are happening after New York Stock Exchange open or at New York Stock Exchange open. So next candle, New York Stock Exchange open. Crazy drop instantly. Now taking a sell down here, 11-point stop loss. It's risky, but look at how this played out. Look at how this played out. Look at this drop. Bro, do you see this drop? This is why higher time frame confluences mixed with lower time frame is key to taking higher RR setups, to capitalizing on a higher risk to reward. And just like that, this is why supply and demand is one of the best strategies, simplest strategies to trade, because you can just sit here. I can sit here with no EMAs, no indicators, and just read price action and take winning setups consistently. I don't even put so much emphasis on EMAs because market structure is key. So supply and demand is all you need.